Okay, ladies and gentlemen, welcome to our panel, which is called the Credit Market Outlook. Now, I'm going to put someone on the spot right from the start, because we had a bit of a discussion about what this panel should be called about 5 minutes ago. So he's had about 5 minutes to come up with a new title. Paul? Still thinking?
I guess we were surprised with the name, and Credit Market Outlook, that sounds, pretty boring. So I thought maybe a better name, I didn't actually know you were really going to put me on the spot, but is, how to make money in a zero-rate environment, because I think that's really the thing that all of us are trying to answer. So I think you should change it to how to make money in a zero-rate environment.
Changed. Consider it changed. So we've got a new title for our panel. Paul Horwath is with us today, Orchard Global. I have Christopher Lee here from S&P Global, Shyam Maheshwari from SSG Capital, and Rob Petty at the end here, Clearwater Capital. I'm not going to tell you much about these gentlemen. I'm sure that you've seen their bios, and if you haven't, you all have access to the internet. So we're going to go straight into it. I mean, we're obviously talking about the credit markets. We're talking about how to make money in markets like these. Yield is very, very difficult to find at this point, obviously, and there are now a lot of questions being asked about central banks and how far their policies can go. So let's kick things off here today. Paul, I'm going to start with you. And I want to know from you gentlemen here today whether you think that we are right now at an inflection point when it comes to these markets that we're in right now. Paul?
Well, I guess that's a short-term and a long-term question. And I think that we may or may not be, probably not be at a short-term inflection point. But I think in the long term, we're in the middle of a very, 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 very big inflection point. And I think one of the reasons why I thought we should change the name of the panel is that before you can have a credit market outlook, you have to have sort of a global macro outlook. And we can back into what our credit market outlook is. And to speak to this bigger picture inflection point, which has been going on now, I think, for the better part of the last decade, actually, and probably will continue to be an inflection point for the better part of the coming decade. You have to sort of establish what your global macro view is. And ours is very much, I could give you the long version, or I could just cheat by saying that we believe in the Larry Summers view of the world. I guess we're competing against some secret invitation-only sort of Japan panel, so I'd be interested to hear, after it got translated, what goes on there. Thank God these things are on YouTube, so I can go look at it later on. Although I don't know if they put the secret private ones on there. But to quote Larry Summers, as I often find myself doing, I think globally this point of inflection that we're in is we are in the Japanification of the developed world plus China. So I know we have some outliers who are going to fly against that, and I'm interested to have that conversation. But if you stay away from places like India and what may or may not happen in the Brazil recovery, we do have a model for what we think the global financial markets and indeed credit markets will look like for the better part of the next decade. And in this Larry Summers view of the world, you worry much more about deflation than you do inflation. Something that I haven't actually looked into the components, but the SocGen deflation index, whatever that means, is at an all-time high. And if you believe that, which we do, then your outlook for global growth is going to bounce between negative 50 basis points and positive 2% for the next decade. And if you believe all those things, which we do, then yes, we are at a point of inflection. Unfortunately, that point of inflection doesn't necessarily speak well for a lot of the non-credit instruments that are out there. If you really believe that global growth is going to be less than 2%, then most public equities are mispriced. Therefore, most private equities are mispriced, and probably most real estate is mispriced. So the point of inflection that hasn't happened yet, and I think will be a very ugly point of inflection when it does happen, is when those markets that fundamentally right now are pricing a 3 to 4% global growth. Why? Because that's what it's been for the last 30 years. The point of inflection that will be potentially more grisly than the '08 sort of correction will be when those markets realize that 0 to 2% growth is the order of the day and not 3 to 4% growth.
Okay, Rob, let me bring you in here. Do you think that we're going to see something that's far more grisly, to use Paul's words, that we did in 2008?
No.
Okay.
Fundamentally, it's not more grisly. We have learned our lessons, but you do need to be nimble. You do need to be with experienced managers that have war wounds, that have lived through grisly, because there are real difficulties and dangers in the credit markets. The way we model it and the way we think about it, we're Asia-only dedicated people at Clearwater. We actually think there are two inflection points to your first question. And the inflection point is really that the global asset allocators are finally ready, 2 or 3 decades in, to increase their allocation in a substantial material way to Asia. Because the money managers of Asia are now in their second decade of maturity. More importantly, the markets of Asia, believe it or not, have outperformed in credit for the past 10 years, both US and Europe, and people are now acknowledging and recognizing that fact. And honestly, the opportunity set, where is it going to be grisly? The opportunity set is Asia today. If it first went post-GFC to the US, and we cleaned up balance sheets and created non-bank lending, and then we went to Europe and we cleaned up and are still cleaning up balance sheets there and went to non-bank lending, where are we in Asia? We grew balance sheets in Asia over the past 8 years. Right? Today, we're at $37 trillion of total debt. That number has doubled in the past 5 years. So where can it be opportunistic and where are there great opportunities? Asia is the place to be. But there are managers, and relatively few of them, that can take advantage of that. So what are the two areas to do it? You want to go buy assets off the banks, just as we all have seen and practiced in the US and Europe, and you want to replace them and be non-bank lenders, just as we have seen in the US. So it's not, I would argue, hard to see the two inflection points. Asset allocation to Asia and actually practicing in Asia credit. What it's hard to find is people that can execute.
And what is the catalyst for that?
It's happened already, right? The same catalyst you have in the Western world, right? You have Basel III, you have NPLs in China, pick your balance sheet, and Chris will welcome your numbers, but it's, we'd say, well over 6-7% of balance sheet. In India, it's substantial. So you have the catalyst for Basel III. We have bank balance sheet problems. There's state-owned banking systems. State-owned banking systems need to shrink, and you need to get alternative lenders in there, or you need to get more credit guys. The catalysts are here.
I think the only difference I have on this thought process is because they are state-owned banks and they are policy statement of the governments, it's they may be defensive today because the balance sheet is looks heavy on the NPL and maybe not reflective in China yet. But on the other hand, as economic recovery kind of comes back, I think the bank balance sheet will be becoming healthier with the more injection from the government as they can afford, which various stages of their evolution. And effectively, because it's policy driven, again, it fuels into the growth. So the capex cycle is a lot driven by the banking system than the alternative. By definition, the non-bank or the alternative have to remain alternative and cannot come into mainstream. But so far, as of now, there is an opportunity of next 3, 4, 5 years where the incremental growth will be in the non-bank than the bank. There is an opportunity set.
Specifically India?
India and China both, actually. In China, again, I was talking before with my colleagues as well. There has been haves and have-nots. Some people get credit, even though there is decent liquidity. And some sectors and some companies don't get credit. While in India, for sure, it is a macro issue where the banks are not lending at all. And therefore, any growth opportunity, buyout, acquisition, growth, capex, has to be funded from non-bank for the time being.
Chris?
I think it just come back to Robert's point about non-bank channels for funding. I mean, in China, we have seen just an explosion in terms of alternative funding channels, whether it's trust funding a few years back, or the what they now call the non-bank or the shadow banking sort of sources of funding, or more recently these cloud funding, peer-to-peer lending. So It has, increased tremendously. It's just that they're not capturing the numbers quite.
There's no transparency, is there, when it comes to those type of markets?
Very little transparency, and it's very hard for us to follow as well, because without data, it's very hard for us to understand the quality of the assets as well as the performance of those assets. But this is one area that will grow. The big question is, even if non-performing loan increases in China, whether the banks are happy to let them go, or are they just going to parcel them into or sell them into these state-owned asset companies? We have seen that play before, 10, 15 years ago. So whether these sort of loans will be traded, they'll be sold to third-party players, that's an open question. I don't have an answer to that, but I suspect that that market will grow, just like we have seen with trusts and also trust receipts.
Yeah, I guess I have a question maybe for all three of you, which also speaks to our bias. So Orchard is a global manager. It's based in Singapore, but it's a global manager. So we can allocate assets to Asia, to Europe, and to the US as we see fit. And by the way, in the last 10 years, we have gone as high as 85% Asia. We're probably much less than now, and that is the source of my question. As enthusiastic as everybody else seems to be here on Asia and Asian growth, I want to take two or three things that you guys have said and put it into a question, and make sure my goal is to quote Larry Summers as much as possible on this.
I'll count.
Now, I haven't fact-checked Larry Summers on this, what I'm about to say, but he has written it in the FT, so let's assume that he's right, and I think he is. The Chinese put more steel and concrete, according to Larry Summers, into the ground in between 2011 and 2014 than the US did in the entire 20th century. Okay, so that's an interesting fact. There is now a transition going on in China and Greater China, and we know what it is, and we don't need to rehash that. And that transition may indeed take China and the rest of the world with it in the right way. But as we all know, when you go through transitions, there's turbulence. And so if we agree that there's going to be this turbulence, the question I have for this incredible sort of pro-Asia sort of camp over here is, if the fundamental sources of credit right now are state-owned banks, this high-yield money market trust kind of thing that is very scary, and peer-to-peer lending, I look at those three decision makers in credit, and I get very worried. Because I don't think that those people have done the good hard work that, the Golubs and the Apollos and the Golden Trees and all the other sort of very intelligent sponsors of this conference have done in the way, I just don't see it. So when that transition happens, and I don't know, the copper suppliers and industrials are becoming less important, and I don't know, consumer, milk producers are becoming more important, how does that point of inflection happen? How does that change happen without actually quite a grisly correction like you saw in the other two markets?
What I'm just trying to say is I totally hear all those points. It is here now in Asia. We're just not as granular as we should be. We have over 10% NPLs in India. Yeah. You can buy, our gentleman from BC was talking, it's all about entry price. When you have a high percentage of NPLs, which are here today, you can buy bank loans in Asia at substantially deeper discounts with real hard assets right now. And you can't do that in the Western world. That's more my point. I love the fact that peer-to-peer guys are helping and solve the consumer problem in China because the consumer needs money there. I have no interest in those assets. But I absolutely have interest in infrastructure projects, real estate loans to developers who no longer can get money at a 50% loan to value when I can do that at 20%, which you can do all day long today. It's an entry price point.
So turn it into this. When Mike Milken said this morning, he said when it comes to banks and when it comes to financials, the true competitors in the time to come is going to be the Tencents of this world. It's not going to be the banks. They're not going to be competitors to each other anymore because it's the Tencents and the Alibabas that are going to come and take that place. Are you interested in those assets?
No, honestly, I have great respect for Tencent and Alibaba, and I think for the consumer, they are going to win, and they are winning, right? But when you go from the real middle market companies in China, of which there's a vast number of successful ones, there is a tremendous amount of opportunity in those guys where the state banks are pulling out and they're only lending to state banks. There's a wonderful array of private